Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news Trump's back down on tariffs came as corporate decision makers concluded reshoring isn't a good idea. There are a few moves to bolster US-based production. But first today, Fed boss Powell spoke overnight, and he focused on the challenges they face keeping inflation under control. He noted long-term interest rates are now notably higher, driven mainly by risk premiums rather than shifts in inflation expectations, while estimates of the longer-run neutral policy rate have also risen. He noted the US economy has changed a lot since their last review and warned that inflation might become more volatile in future due to more frequent supply shocks, which will make it harder for central banks to achieve price stability. Throughout his remarks, Powell also stressed the critical role of anchored inflation expectations. Meanwhile, US initial jobless claims slipped slightly to 205,000, but that was what seasonal factors accounted for and what analysts were expecting. There are now 1.73 million people on these benefits, a reduction from last week, but it is up almost 100,000 from this time last year. Maybe surprisingly, American producer prices fell by 0.5% in April, following a revised flat reading for March and defying market expectations of a 0.2% increase. This was the first decline in PPI since October 2023 and the sharpest drop since April 2020 during the early pandemic period. The retreat was largely driven by a 0.7% fall in service costs, the largest since data collection began in December 2009, and that was due to a 1.6% drop in margins for trade services because businesses are absorbing much of the impact of higher tariffs. PPI is now up 2.4% from a year ago. Industrial production in the US didn't rise as expected in April. In fact, factory output fell 0.4%, reversing the increase in March. And the prospects of shifting significant production back to the US seem remote in many diverse categories. There were two regional factory surveys released for May overnight, and both declined somewhat. The New York Fed's Empire State Survey reported another modest decline. The Philly Fed's survey of their core Rust Belt region recorded a sharp improvement, better than the improvement expected, but it is still in decline. In a sign of the times, a major lithium battery recycler has entered bankruptcy. US retail sales were little changed in April, following the upwardly revised 1.7% front-loaded pre-tariff surge in March. 2024 gains mean they're 5.2% higher than year-ago levels. And the NAHB Wells Fargo Housing Market Index in the US fell sharply in May to its lowest level since November 2023, and well below what was expected. Home builders are glum. Current sales conditions fell. Sales expectations in the next 6 months edged lower. And they said traffic of prospective buyers has dropped recently. Meanwhile, housing starts in Canada jumped 30% in April from March, and that was well above what was expected. It was their most since June 2023. US tariffs on Canadian softwoods is likely making Canadian house building costs lower. Across the Pacific, Japanese machine tool orders rose 7.7% in April from a year ago, but that growth was a slowing from the 11.4% growth in March. But it was the 7th consecutive month of rising machine tool orders. Local orders actually dropped 5.4% from a year ago, while foreign orders jumped 13.3% on the same basis. And India's exports were nothing special in April, certainly not reflective of rising industrial power. They slipped from March, but were up 9% from a year ago due to the gains in prior months. In Europe, industrial production rose by 2.6% in March from February, marking the strongest increase since November 2020, and rising from a good 1.1% gain in February. The result easily beat market expectations of a 1.8% rise. The surge was driven primarily by a rebound of output of durable consumer goods. In Australia, they added 75,500 jobs in April, almost 47,500 of them full-time positions. Their employed workforce grew 2.75% in the last year. Their jobless rate eased to 4.1% from 4.3%. Inflation pressure plus the strong jobs report might have the RBA rethinking the wisdom of a rate cut. And bulk freight rates fell 7% last week to be 18.5% lower than year-ago levels. Container freight rates were also 18% lower than year-ago levels, but they did rise 8% last week with a surge in outbound cargoes from China across the Pacific on the sudden pause in tariff hikes. The US Treasury 10-year yield is now at 4.45%, down 8 basis points so far today. And the price of gold will start today at $3,218 an ounce and up $43 from yesterday. But oil prices are down $2 today at just over $61.50 a barrel in the US, while the international Brent price is just on $64.50 a barrel. And the Kiwi dollar is now at 58.7 US cents, down 40 basis points from yesterday at this time. Against the Aussie, we're down 10 basis points at 91.7 Australian cents. Against the euro, we're down 30 basis points at 52.5 euro cents. That all means our trade-weighted index starts today at just over 67.2 and down a net 40 basis points from yesterday at this time. And the Bitcoin price starts today at $104,020, up 0.8% from yesterday. Volatility of the past 24 hours has remained modest at just under plus or minus 1.2%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.